Hey guys, welcome back to our channel. Today we are going to discuss about is it the right time to invest in the Indian markets or not, given that we have already corrected by more than 10%. So there is a chatter in the air whether it's the right time to invest or not. So let's conclusively decide today. We are going to look at it from three angles. One is that we are going to look at the historicals in terms of how on a monthly level the index has performed and what's the usual drop that we have seen over time. The second approach will be to look at the technical analysis in terms of what are the ranges in which the Nifty usually varies and what's the mean reversal time horizon that we usually see when it comes to reverting back to the original high that the Nifty has created. The third thing that we are going to look at is the global indices, how they have reacted over time, and where does India play in right now, and does it make a sense for India to play the game by going back to the original level. Once these three things are covered, we are going to look at the end whether it makes sense for us to invest in Nifty 50 or whether it makes sense to invest in uh, small caps, mid caps, or junior Bs. So diving right in, let's look at some of the drops that we have seen the recent times. Uh, Starting from currently what it is like 8.83 drop is there, which is the current drop of around 2300 points. Before that, from uh, the high that was created in the month of Jan of 2022, there was around 17.89% drop, and that drop was mainly because of the run up that happened of the 18 candles that had formed. After that, there's a period of stagnation that had come in. Before that, there was a 40% decline that was mainly because of the COVID. And if you go back, you will see that in 2015 there was again some drop, which was again in the range of around 25%. That is mainly because of the China crisis that had happened and also demonetization that had kicked in at that point in time. So these were the reasons. So if you look at all the three things, they were like significant reasons that were present behind a significant drop that had come in. Right now, do you see any functional issues or monetary problem, financial problem within the ecosystem? The answer is clear no. Had that been the case, then we would have seen some impact on the global indices, but that is not happening. If you look at Nasdaq, it is up by around 30% year to date versus Nifty is just up by 11%. And if you look at BTC, that has also like more than 4 times it has gone. That shows there is a strength in the global market. People are ready to invest in money, but not in India market. But what has been the reason, and does it play well in the long run? That is what we have to figure out, and we will look at the technical analysis. Now, technical analysis will help us understand what are the mean reversion levels. So if you look at the channel that is created whenever Nifty there is a run up, there is a 1 month chart, but I will just go back to my 1 week chart so that the candles are spread out and we do see some good amount of variation within the channel. If you look at this channel that was formed earlier, Nifty used to stay between these channels for all those 18 months, and if you look at, this was the mean reversion line and it had hit it multiple times. When it crossed below that, it had gone back to the extreme negative point and it had come back to the midpoint, and then it was ranging in that direction. So that means that the channel theory stays very strongly and resonates with Nifty. Then again, when it went to this stagnation phase, it was range bound between these two areas. Now again it has come to a channel phase and it has been trending from last uh, 17 to 20 months. If you look at from the start of 2023, Nifty has been ranging in this channel. Now we are trending over here towards the end of 2024, and this channel, the negative range is in the range of, so last week we had touched around 23,800. My guess is it will again going to make a double bottom in the very short term. Double bottom, when I talk about double, it will be more on the daily time frame, but it is again going to touch in the range of around the negative extreme of this channel, and there is a good possibility that Nifty is going to bounce back. The reason I say it is going to bounce back is mainly driven from couple of factors. One is on the global performance that we are seeing. FIIs are drawing out money, but there are a lot of cash that is still there with the DIIs, and they are ready to invest in the market as such. So that drop that we have seen in the recent time is mainly because They don't want, FIs don't want to invest in India. They are seeing other lucrative opportunities, maybe because of the LTCG rates which are increased from 10 to 12.5%. That is something that is not taken in the positive manner by the FIs, and there is also chances that 12.5% of LTCG will grow to around 15% in the near future. So look, taking all those into consideration, what may happen is FII will take out money from uh, the large cap stocks, and they've already taken out significant amount of money. But that may not happen in the future. Once it comes to this level, we will see that the money will start getting pumped by the DIIs. They will support the market, and it will come to a point where it will at least come back to this nominal level, which is the mean level. It will strike it once, and then it will decide whether it wants to go up or it doesn't want to go up. That's how I would view it. But there's a good amount of correction. On 10% correction has come without any financial problem in the ecosystem, in the economy of India. So that's a very good positive, and we should look at it as an opportunity where we can invest, right? Now, if you look at, if not Nifty 50, if we just go to Nifty mid cap, so if you see again the drop in this case, it has come from 13,380 to 12,100. Again, it's a 10% gap. But if you look at the beta of Nifty mid cap stock, Nifty small cap stock, it's close to about 1.4 times. What it means is every 1%, if there's a 10% decline in Nifty 50, then the corresponding decline in Nifty mid cap stock should be around 14% or 15%, close to about that range. But since that has not happened, it's just 10% that we have seen for Nifty mid cap and Nifty small cap as well. The only thing that it corresponds to, either the correction in Nifty mid cap and small cap has not come in the commensurate manner, or whether Nifty 50 can go back to the earlier levels, just to make sure that the market is doing justice to both the indices. And see, the Nifty 50 has taken a beating mainly because of the large cap stocks which are hunted by the FIs, and they have gone for a toss. That's the main important reason for the Nifty 50 to go down. There's one more reason that I would like to bring it to your notice. If you look at the earnings season has been slow this quarter, that I agree. But if you look at the historical earnings, so Nifty 50 was trading at a premium mainly because the PE ratio, see, the PE ratio had not gone up, but the index had gone up at a significant level, right? Now, if you look at if you apply the same mean reversion theory to the same chart here the Nifty 50 has gone down, where the PE has not gone down. That means the earnings are strong as such, but the index has gone below this. What it says is, mainly what you see is, most of the times this red chart, which is Nifty chart, it should be the PE chart should be over the indices chart, but that is not happening. There's a strong possibility that Nifty will rebound to its level and recapture what it has left behind. So that is again one angle that will prove that since the market is trading at a discount right now, earnings are strong, the PE there's a still significant amount of PE that is still there. It has come down, and is a good opportunity for us to buy. There is no financial discomfort which is existing in the market, and this seems to be a very good time where the market, or there's a good lump sum investment that can be made either in the future funds, or you can do it by yourself. So that's it for now. I think let me know if you want any recommendations in terms of what all stocks, what all categories that we should be investing on. A couple of categories that come to my mind. One is like, if you look at the banking stocks, they have been trading very well. Even the rally that is going to come in Nifty 50 in the near future, it is going to come from the banking stock. So PSU Bank Bs, Nifty Bs, two couple of ETFs that I would advise. It's not an advice, but this is personally that I would be making my bets on. I will already invested some amount of money in those, but this is something where I see a significant upside. uh, Rather than picking a particular stock, that the indices or ETFs as such uh, do give an assurance in terms of how that the market will be panning out in the future. That's it for now, guys. Please help in letting me know, like, if there are any comments, or if there's any feedback, or if you want me to cover any more stocks. Thank you.